Welcome back, everyone. On Thursday's video, I had told you when we were down in this area here that a short squeeze is on the way. And the way I knew that was because we had 6 days of red, and I wasn't exactly certain that we were going to have a short squeeze, but we get in pretty historic territory when you're down that many days of red. And there was lots of good longs throughout this entire 6 days of down. However, um, like we were still moving down. So if you had taken longs off all the supports I had mentioned in all the videos, if you go back to every single video I actually published, you will see that they were all long trades. None of them were short trades, and they all worked. Every single one of them worked. So, and all we do is look for major lows, recoveries of them, and then off to the races again. But to give you an example of why today's rally just exploded was we have this little lower low type of deal going on here. And it was testing, and it trapped below, recovered, rallied, and then it trapped below one more time, and then ensued the major rally here. We built a nice little base in this area here. There's lots of longs to be taken off here. In the Thursday video, I had said I want to see a flush down to 65 and recovery. We got just that in the open of the session. It flushed straight down below the pre-market lows, recovered, and then was off to the races for a big substantial move, like 60 points. Came all the way back down, flushed the pre-market low again, recaptured it, and then ran for a whopping over 100 points. It was like 123 points, which is absolutely incredible. But that's the power of liquidity draws. Now you got the liquidity draw below the base, you got the recovery, you enter on the recovery, and then you get an explosion to the upside. And that's exactly what we saw. But our job is to position for these moves before they happen. And that's why I gave you many ideas here. This really shows the importance of holding a runner, because I like to take my 10 points and then let it go. I will hold a runner sometimes, but I do this with a full-time job. So in order to keep myself from being too stressed out, trying to figure out what the market is doing at every minute of every day, sometimes I just take my points and call it a day. And any of the trade ideas I gave you would have given you the 10 points, because you look for a dip and recovery. And if you drill down to a 15-minute chart and you check where the pre-market low was, we got our first dip here on the 9:30 open 15-minute candle, recovery, it retested. So I gave you that Thursday's low was 73. So look at what happened here. We dipped below Thursday's low, went all the way down, took out pre-market low by a point, recovered it, and recovered the day before's low, Thursday's low. And then you can, as long as you're holding above 73, which is what I said in the Thursday video for Friday, as long as you're holding above the 73 level, you're going to get a rocket back up. You're going to get your 10 points. Had you entered when they dipped back down to 73, they dipped a little lower to 71, but you would have had 2 points of drawdown if you had entered at 73 once you saw this recovery. You would have had 2 points of drawdown, and then we ripped all the way up. And the first profit target I had was 93. I told you that was the trade from 73 to 90. That's 20 points. And if you actually look, we went all the way up to a high of 14. So that trade was 40 points. This is incredible. But it just shows you the power of knowing where price wants to react, and where price just basically where demand is. I'm trying to find different words, but where demand is very important. And we know that the market closed at the 73 level. We know it's important. We dipped below it, recovered it, rallied, dipped below, recovered it, rallied, dipped below, recovered it, rallied, dipped below, recovered it, rallied. First time, best time, obviously. But anytime you make a new low, it opens opportunity. So when this new low happened, markets will typically use that new low to propel a massive squeeze, which is why we position ourselves in a very systematic way, which means like 9:30 open created a new low recovery. We're along with a runner, right? Along with a very small runner. Then they came back down. Maybe our runner gets taken out. Maybe you took your profits already. I don't see why you wouldn't have with 40 points when we're only looking for 10. But here we go again. Market took out your runner, made a new low, recovered. You're backing along, and then you're backing along now, and then you have a runner, and the runner will pay handsomely. And eventually you'll catch this move if you have that same systematic process every single time. So in a nutshell, there's not really much for you to do, I would say, for tomorrow's session, Monday session. What I would be looking at is to see if this is where we topped out. Let's just say this is the top of this rally. I'm not really sure. I could see the open coming up and spiking the 77 level or so, and then falling. So we might see a pop and then come back down. I don't really like Fibonacci's, but I will say that I could see this happening. If we topped out here, and that was Friday's low, I could see us making a move all the way back down to either the 50% level or the 25% level. And judging by how this rally is looking, your first support down is this 45 level. I would not want to buy that on a direct buy after a major rally like this, because you're in jeopardy of retracing the entire thing. So once if we test this, let's say we dip below it, recover it, it's a good long back up to level profits, obviously. So let's say we get a dip below 45, 50, let's say we come all the way down to 38 or 40 or so, recover 45, we could run back up to 58 potentially. All this is just speculation. I do think we'll retrace a lot of this move tomorrow. It's typically what happens after these big squeezes. You get a big squeeze, everyone thinks they missed out on it. You get a big drop, everyone thinks that we're going back into a bear move again. Then we get a big pop, and then we find ourselves in a brand new range. So we did break out on Friday, a massive squeeze. I'll look for entries in like, let's say we'll know more tonight when we see where the pre-market high and pre-market low is, because as always we'll map out pre-market high, pre-market low. If you had done that in Friday session, you would have found that pre-market high was right here. So let's just drag it down so you could see what happened at pre-market high. Pre-market high was right. Where is it? Right here. Well, no, it's for Friday session. So, yeah, it was right here for Friday session. So we'll bring that right there. So we map out pre-market high, we map out pre-market low. It gave a nice little liquidity spike of pre-market high. Looked like it was going to rally, came back inside of it, tried to recapture it, came back inside, took out pre-market low one more time, and then busted through pre-market high. Usually pre-market highs and pre-market lows serve as really good spots for liquidity. I like take my profits. So like I never really mentioned this in a video, I think, but something I think you should learn is, you see how we put in a pre-market high around 630, and then in the cash market open, we actually, if we don't first pop above it and then come in, that would be a false breakout. So I wouldn't trade that, or unless you want to take that short. But it's not a good move in my opinion. It has a very high failure rate. But here's what has a very high win rate. If you don't take out the pre-market high on the open, and you come down and take out the pre-market low first and recover it, now your profit target is pre-market high. So the way that would look is, we dip below 58.50. You bought the pre-market low recovery, somewhere around 60 or so, let's say, and then you take your profits up at 5,900. That is a 40-point move. You know me, I only take 10 points. I like that. I rack up 10 points every single day almost, and that pays the bills. That is a lot of money. If you are leveraging that with prop firms, you are making quite a bit of money weekly. If you, let's just say you had 5 accounts and you were doing one ES contract with 10 points per day, that is 2,500 a day. You are racking in over 10 grand a week with that process. And if you check my previous videos, I gave you an entry and exit of 10 points or more multiple times, and we have not failed yet. So for tomorrow, in a nutshell, I would like for you to wait for price discovery to happen, because after a massive squeeze like this, no one really knows what's going to happen next. I would be very weary of buying supports on the way down until we see some sort of support hold and recovery. As always, my favorite is to see the market put in a pre-market low, that it liquefies, recovers, and then off to the races again. But we had a great trading week last week. I would hope that you are patient enough to wait for price discovery tomorrow. And as always, just follow the process and let's rack up these small wins daily, and we'll all become very good professional day traders together. This is my method. It works very well. And I hope that you can see that and would love to execute it the way that I do. If you have any questions, please drop it in the comment section. I will respond. Thank you.